Welcome back to my channel where you'll get the best and greatest stock advice for free by the Wild Goat Effects. So, someone asked me how do I know where to enter calls or puts and where are my entry and closing points. So that's what we'll be going over today. Um, we'll just use Friday's watch list as a reference. So, as we can see, on Friday we did enter snow calls. We got in the smaller move on the Discord and then a longer move if you were just in the alert room. Um, but the only reason I know where to enter these calls, we look at the daily chart. I only look at the daily chart for entering a position, and then during the day, throughout the trading day, I look at the 1 minute chart to see if it holds the position so we can enter the trade. And as you can see, it shot up, it got rejected, but it did close over. So when it shot up again and wicked down, we entered this position. And then it shot up. And how did we know? We actually closed literally right at the top. How did we know to close right at the top? If we check this out, scroll over, scroll over. So here was our position. We only got in for the first hour. And how did we know? This is the next highest candle. It got rejected off here and made it wasn't enough buying pressure, but then it kept going up. So we did get in for the shorter play, but we still made 30%. The longer play was about a 600% return, but we did 0 days to expiration, so we weren't looking for a huge move, you know what I'm saying? Because it was 0 days. And that's how I know my exit points. The other way I know my exit points on a trade would be looking at Webull and looking at the level 2 order book. And for snow, I you would know because let me try to, this is like pre-market so we won't see any buys. So for Take Two Gaming, actually that's too high up. Okay, let's say this was it. We can see that the bid buys are lower than the ask buys. That means the ask price will get filled, and meaning the ask price is the price of the stock going up. As long as there are more orders on the ask price, potentially there will be a bigger move up than there is down. So we'll watch and hold for a later position because we can see that the levels on the ask price are bigger than the bid price. It's looking more bullish to buy calls than to buy puts on the stock. That's the other way I look for it. Those are literally the only two ways. Don't even complicate it. It's very simple. Like people have problems stock trading because they overcomplicate things. Stock trading's very simple. The only thing that's hard is having the mental capacity of actually taking your own trades, being comfortable taking your own trades, and knowing when to close the stock. That's really the hardest part when it comes to trading stocks. So, if we look at the square position, we entered this on Thursday because it shot down, and then we also had this was a line to buy puts if it broke under this level. How did we know? This was a bull, it was a bear candle, but it was in a bullish formation, meaning the stock is more likely to get rejected down again if it opens lower, which it did open lower, but it didn't open below our levels, so we never entered this position. But if it did break under this line, we would have entered. But we can see square went bullish, so we didn't enter the position. Let me see if I can give you one more example before I close it up. So take two. In the morning, we did enter this position. I believe we entered around this candle. We just entered at the top and we took it down. This was just a play called by me because I saw it break under this. There was like a level here, as you can see, it consolidated. So as soon as we saw it break in a gap formation, because this is a gap right here, you can see there's spacing between these, I called the play, we entered, and we ended up closing back at our stop loss. We didn't make anything this play, but we did enter, and that was our exit. That's our stop loss. This line that I have here is always the stop loss. I don't care at all. Like if the position, like right here, okay, this is a perfect example right here. The position holds right here. It's still under the stop loss. So we're not exiting right here. We'll hold and we'll exit when it breaks. We only enter on breaks or close on breaks of the stop loss because some occasions where it does wick up, it does fall back down, and we don't want to miss the initial play we were going for. So that's why we wait till it breaks above the stop loss or below the stop loss, depending if we're buying calls or puts, to exit the trade. And same thing with entering. We want to wait a whole minute before or after it breaks below or above, depending if we bought calls or puts, to enter the trade, just so we know that the position is stronger going down. I hope this video helped in any way. If it did, you need more explanations, let me know in the comments below. I appreciate y'all coming out. It's exciting knowing other people want to learn and one day, maybe quit their 9 to 5 job like I did and become a full-time trader. Let's do it. We all can make this bread together. I stream 8 a.m. to 10 a.m. Monday through Friday. Stock alerts. If you guys want it, we've been like, I think we're 45 out of 50 for the past 30 days now. So you guys are in that, we want 90% win ratio. I got that. It's with this strategy. And we're only looking for 30% gains, but I'm good. I mean, if I'm putting 1,000 down, $300 a day, that's good for me. You know what I'm saying? All right. See you guys later. Peace out.